welcome. It is time to get started, and we appreciate you being right on time today. Thanks for coming along. We have traders from all around the world, and wherever you are, I hope you're having a good week and no virus problems. I know these are still tough times for a lot of people. We hope you and your family are well, and things do seem to be improving, at least in some parts of the world. But it's a slow process, isn't it? Taking longer than I thought it would. This is Craig at Max Trading. Chris and Eusebio are here along with me, and we're very glad to include you in the Max community today. A lot of other traders will join us later by video. Thank you, and we welcome you as well. The sun never sets on the Max membership, and believe it or not, that's the truth. We have members in every corner of the world, and we really enjoy being a part of such a vibrant and active trading community. This is an ideal time for you to learn a very profitable trend following system, and we love having the opportunity to show it to you. And on top of that, Eusebio today is teaching 3 very important trading tips. So we expect this to be a very helpful webinar for all of us. And even if this is not your first time with us, it's still good to get refreshed and updated, and Eusebio's tips will be a great review. We continue to be very pleased with the ongoing performance of the Max trading system. It has been live traded for more than 12 years now, and we know it is a game changer for every skill level of trader. You might be a newbie, or you might be a proven veteran. And either way, everybody loves the confidence and success that comes with this system. And well more than 2,000 traders have already graduated from a Max trading course. That is a lot of training. And over the time, we've learned how to do it very well. You will get the help that you need. And in fact, on the 10th of June, just a few days away now, we begin our 74th Max Standard course, where you can learn this very profitable, very flexible system, excellent for all markets, all time frames. For example, if you like the adrenaline rush of the faster charts, let's say 1 minute to 5 minute time frame, you will love Max Trading. Or if you perform better on a slower chart, 15 minutes, 30 minutes, Max is for you. And if you're one of those who just does not have much time for trading, and you don't care for sitting in front of your charts for hours at a time, then you will really appreciate the 4-hour, the 8-hour, or perhaps the daily charts, and Max is also great for you. If your preferred market is the YM, ES, maybe the DAX, or Forex pairs, commodities, options, stocks, Max is for you. Very flexible, very powerful, very profitable system. And along with it, you also get a great trading community. Many of you will be taking a Max course with us in just a couple of weeks now, and that gives you a lifetime Max membership. So we look forward to being associated with you for many years yet to come. The Max community also provides an absolute wealth of ongoing support and unending assistance. That's right, never-ending assistance. It just goes on and on long after your training has been completed. And you also get free trading workshops, skill building workshops, at least 2 or 3 times every month, which allows you to continue growing as a trader. New ideas can be really important to help us meet the challenges of the markets, which are always changing. They're always in a state of flux. Eusebio has helped us to meet that challenge by developing 2 extremely important indicators, which we have added to every Max trading course. First is the Enhanced Trade Format Indicator, or the ETF, and along with it, the Companion. The Companion is our Price Directional Bias Indicator, and used together, these 2 indicators can make a huge difference in your trading results. And all of these things wrapped into one package: the professional training, correct price action analysis, knowledgeable global context, effective indicators, supportive trading community, lifetime access to your instructors, These things combine to give you a wonderful opportunity to learn trading that will actually make a difference in your life. And no, we never expect you to just take our word for it. We do want you to see for yourself. I will be sending you an invitation to attend a live trading webinar scheduled for Friday, the 4th of June. And we'll be trading the price action resulting from the non-farm payroll news release. So you'll get to see on real-time charts the effectiveness of this system. And the great thing about live charts is nothing is hidden. You can't exaggerate anything. You can't hide anything. Everything is right there, all out in the open, and anyone who wants to see it can. So I hope you can attend or at least watch the video playback. Thank you again for being a part of our webinar today, and if you have questions we want you to ask, just ask anytime. You can use the question panel right there and go to webinar, and we'll try to make sure that every question gets answered. Eusebio is the developer of our very special indicators and has made many other contributions as well to the system, and he himself has been trading this system full-time for many years. He'll tell us a little more about his background and his experience, but I assure you, I want you to know he is the perfect choice to give us the details about max trading. He's a phenomenal trader, a skilled teacher, and I love it that he gets real satisfaction from helping other traders. So Eusebio, thank you so much. We're very grateful for all that you do in the Max community and for taking time today to show us the system. The microphone is yours.
Thank you very much, Craig. Hello, everyone. Welcome to this webinar for the presentation of the Max trading system. I hope you are all safe and fine. So, before presenting the Max, let me give you a few words about who I am. So, my name is Eusebio. This is my first name. And I am a Belgian trader, but living in France for many years now. And I am a Max instructor since 2009, after the designer, the creator of the Max trading system, Dr. Jim Pruitt, passed away. And so I am a full-time trader in the Forex since 2008, in fact. So at the same time, I have taken the course with Jim. But I am a past software engineer. I have practiced that profession for around 28, 29 years as a services manager. And the last 15 years of that profession, I have dedicated my activity to the banking industry only in some important bank in Europe, which gave me the opportunity to work with some traders in these banks. But I am interested in investing and in trading for many, many more years, for around now 38 years, almost 40 years. So I have started in 1983 exactly, and I have been interested in the stock market, in the options market, the futures market, and lastly, since 2000, the Forex market, so the currency market. Okay, that's enough for me. Now let's begin with the Max presentation. So now the Max methods, because we have several methods with the Max, or several levels of the Max method, is adequate, in fact, for everyone who is interested in trading. You may be an experienced trader looking for some consistency either in the profit you want to generate or in the trading process you want to apply. You may be a full-time trader, you wanting different sources of profits in your trading activity because you can diversify your type of trading activity. You may be perhaps a trader struggling to become profitable. This also exists. And you may be perhaps also a new trader needing a reliable trading method. And so for all these kinds of traders, the Max method are certainly perfect for you. If you want also to work from home, and during these last months with the COVID around the world, so working from home has been a big subject. For example, here in France, a lot of people are working from home. And if you want also to plan for your retirement, if you want to generate extra income, then the Max is certainly for you too. Now, the Max has been created many years ago by Dr. James Pruitt, known by his student as Tiger, and the Max is in fact the acronym symbolizing three important concepts. The M stands for momentum. Indeed, we want to see momentum and volatility when we want to take a trade. Then the A stands for acceleration. Now, acceleration does not mean we want to see the price accelerate in its movement. We want, in fact, to catch more profit with a scaling process, a scaling technique. And the X stands for exit because, in fact, when we open a trade, this means that we want to close this trade later in a progressive way, eventually, making partial exit and then at some point a final exit. And when the max has been created by a tiger, it has been essentially a trend following method with some possibilities of counter trend trading and breakout trading. And over the years, so we have refined that concept of the max, and now we have only the concept of trend trading. So because we have eliminated the concept of counter trend. The max trading system is also completed with a very strict trade risk management and money management, and it can be applied to any time frame and to any tradable market. It can be the stock market, it can be the commodities market, it can be the futures market, so any tradable market. So what I'm going to show you is I'm going to illustrate some concept of the max through some examples with some recent example and some past example. But before that, I would like to show you, just to thank you to be present, to show you three tips you can use, in fact, in your own trading system if you have a trading system. It may be a scalping system, it may be a trend following system, it can be any other type of style of trading. And so the three tips are how we can use divergence, how we can recognize a divergence to possibly bank some profit, how we can exploit a long bar, a big candle in order to also bank some profit, and how we can reduce the risk along a trend, so and along a trade. In this first example, we have a downtrend. I will explain later the component of the chart, but what I would like to focus here is on the concept of the divergence. When we mean divergence, this means that we are using a momentum oscillator, for example, and our momentum oscillator, in particular on this chart, is the stochastic of the RSI. And you know what a divergence is. When in a downtrend the price is making two successive lower lows and the oscillator is making two successive corresponding higher lows, we have a divergence. This is what we call a basic divergence. But in order for the divergence to appear, we need to wait for the candle, this blue candle here, to close, because as long as the candle is not closed, we are not sure the divergence will appear. And once the divergence is observed, then we have to define an exit level. It's not because we have a divergence that we have to close the trade. And the problem many traders have using indicators is they believe that indicator can predict what the price can do. But in fact, no technical indicator can predict what the price can do. What we can do with an indicator is when the price is pulling back, and a pullback when we are in a profit is always a risk to see some profit disappear, because we never know how far the pullback will be, how deep the pullback will be. And so we need a way to quantify when the risk this pullback introduces in our trade becomes too much important in order to reduce the risk which appears at that moment. And this is what we do. Once we have a divergence between the price and the oscillator, we define then an exit level, and if the price follows through and hits that exit level, we make a partial close. And I will be a little more explicit that way in the live example in the example I will show later. And so in this case, we have made a partial exit. A partial exit in our terminology is always called an MX, momentum exit. And then later on, it happened that after the price resumed the downtrend here, the price made again two lower lows, while the oscillator made two higher lows. again a divergence. And so we repeat the process. Once we have identified the divergence, we identify or we define an exit level, and if the price follows through and hits that level, we make another partial exit. So we can close half of the trade, we can close 1/3 of the trade, so any portion theoretically you want. And along that down movement, I have another example of the divergence. So we call it a bullish divergence because the pullback is to the upside. The price again makes two successive lower lows, while the oscillator makes two successive and corresponding higher lows. So we have again a basic divergence, and so we repeat the same process. We define an exit level, and if the price follows through and hit that level, we make, for example, in this case, it can be a full exit. We close the remaining opened unit. And so you can see in a relatively small movement what kind of profit we can extract from such a movement. And I have called that divergence a basic divergence because there are several types of divergence, and the basic divergence is the simplest form of divergence. But there are more complex divergence, and I will simply name them without explaining what they are. We may have, for example, the hidden divergence. We may have a persistent divergence, an external divergence, and so on and so on, a group divergence, and so on and so on. So using an exit technique like a divergence in a momentum oscillator is also one way to bank some profits when the price moves in our favor, or to reduce the loss should the trade be closed as a losing trade. So we reduce the risk in these two ways. And so banking a profit or closing partially a trade is an important way also to reduce the risk on the trade. This is an example with a long trade in an uptrend. So we use exactly the same technique, but in this uptrend we now compare two successive higher highs of the price with two successive lower highs in the oscillator, and we apply exactly the same technique. So, and you can see that we also adjust a stop loss along the trade in order to also reduce the risk on the trade. In this example, if you observe carefully this chart, when the first divergence appears here and a first partial exit has been made with a nice profit, when you compare that profit with the stop loss size, and when you see where the stop loss has been adjusted just above the entry level for the trade, so this means that the rest of the trade is at least break even. So we have banked a profit on a portion of the trade, and the rest of the trade is break even. This means that at this moment we have a guaranteed profit, and so there is no longer risk in this trade. So adjusting the stop loss and banking some profit when the price has moved in our favor are two important mechanisms to manage, to handle the trade risk. And these two mechanisms are part, in fact, of our trade risk management. Another very nice exit technique, or to bank some profit almost for sure, is when we have a long bar. You can observe that in this uptrend, we have here what we call an LB, a long bar. LB is the abbreviation for long bar, and a long bar is defined by its length. The length is always measured from the high to the low of the candle, and this length must be twice or more the average length of the previous bars. And so you can define any criteria to define what are these previous bars, but we consider the movement preceding the long bar. And if the average length of these bars is such that the long bar has itself a length twice or more than the average length, then we have a long bar. And when we have a long bar, this means that the price has moved far away from the entry level, and a long bar is always a nice opportunity to bank a profit. Because 2 out of 3 times, at least in the Forex, when we see a long bar, the price makes very soon after a retracement, and sometimes a deep retracement, a deep pullback, and sometimes even a trend reversal. And so when the price begins to retrace, the trader has to define where to make a partial exit. And this level for the partial exit, we have another one here, can be defined as a portion of the length of the bar. We can take, for example, 1/4 of the length of the bar. We can take 1/3. We can take even 1/2 of the length of the bar. Personally, I like to take 1/3 of the length of the bar. And again, when such a profit has been made, and if we adjust the stop loss somewhat, the trade almost always becomes a risk-free trade and even gives a guaranteed profit. So the divergences in a momentum oscillator, the long bar exit technique, and the stop loss adjustment are three important mechanisms you can use in any trading system, whatever your trading style, to have an important control on the risk you have on the trade. Now let me explain some concept of the max here through some examples. On this chart, you see, of course, in the main chart, you see the price movement with red and blue candles. I suppose you know the definition of these red and blue candle. A red candle is when the price moves downward, a blue candle when the price moves upward. And then we have some indicator. We have what we call in this blue channel the home base channel, which is a long-term moving average. We have this small gold line, which is called the momentum line or the MO line, and then we have the two ETF lines. The two ETF lines are these two yellow and orange lines, which are extremely regular, well separated, almost parallel, and not very sensitive to the pullback the price can make. Sometimes when the price makes a pullback, these pullbacks do not influence the ETF lines. These ETF lines are not enough to define a trend. We have then at the bottom of the screen what we call the companion indicator, and the red and green line is what we call more specifically the slow bias. And so the slow bias represent what the price or how the price is trending in a higher time frames. The other line in blue and orange represent the fast bias, which is used as a confirmation when we have an entry setup. Now, to initiate a trade, we always take a trade in agreement with the slow bias. And so when the slow bias is red, we will consider only short trades. And when the slow bias is green, we will always consider long trade. That slow bias indicator is a technical indicator, so the definition of the bias here is a technical definition. We have another definition of the bias we call the max advantage bias, which takes also into account the global context. And when we trade in agreement with the global context, let's suppose, for example, for the euro Aussie dollar, that day a few days ago on the 21st of May, the context was to the downside, so the max bias advantage was to the downside, so we had only to consider short trade. And so in order to time our trade, we will use the slow bias when the slow bias will be red, and we will ignore the long trade because we never know how far the price will move in this uptrend. Now, in order to identify a trade, we have to identify when the trend starts, and to identify the start of a trend, we will use some different price pattern we will call entry setup. And so once an entry setup is identified, we define an entry level, we associate with the entry level a stop loss, we always use a stop loss, and then when the price hits our entry level, we have a trade, in this case a short trade. And then along the trend, we will make, if we use the most basic level of the max, I mean the max primer, we will make, first of all, when an exit setup will appear, we will make a partial exit closing half of the trade. Whenever we open a trade, we consider the trade is made of 2 units. We calculate the size of these 2 units with the position sizing concept, combining the stop loss size and the risk, the financial risk we associate to the trade. So we close 1 unit. And then later, when we have another exit setup triggering and the price follow through to hit our exit level, we close the second unit, closing the trade. In this example, we have made a total of 22 pips and 46 6 pips for the 2 units, so a total of 68 pips, representing a reward to risk ratio of plus 1.79 AR with a stop loss of 19 pips. If the trend continue, we can possibly open a second trade and we repeat the process. We open the trade, we associate a stop loss, we make a partial exit on an exit setup, and then a final exit on the next exit setup. An exit setup always represents a situation when a risk appears for the trade, when the price begins to pull back, or when we have a long bar. But most of our exit techniques are based on a pullback, a retracement the price initiate. And because we never know how far a pullback can be, so we have defined a mechanism to be able to close at least a portion of the trade. And we have several types of exit technique. We have exit technique based on indicator, like the divergence of the RSI, for example, but also exit technique with the pure price action. We have also exit technique combining a price action and one or two indicators. We have exit technique based on critical time period along the day, for example, a news release, and some other exit techniques. We have short-term exit techniques and we have long-term exit techniques. A short-term exit technique always calls for a partial exit. A long-term exit technique always calls for a final exit. Now you can see that in this downtrend, so we have also horizontal lines which represent what we call in our jargon max price levels, which represent possible levels of supply and demand. And so when the price is facing such a level, we have to pay attention for the entry. And when the price is reaching such a level when we are in a trade, we can consider to make also an exit. Now this same movement, this movement has produced two trades for a total reward to risk ratio of 2.72R in just a few hours of trading in a small time frame, the 5-minute time frame. But the same movement, when we apply the next level of the max, which is the max standard, including the scaling process, with this scaling process, we can make several scalings. So we have our initial entry, like with the max primer, the same first partial exit, and then we have a scaling, which is the entry number 2. Later on, we have the possibility for a scaling number 3. Then we have a partial exit, then another scaling, then another partial exit, and so on, until the final exit, which in this case corresponds to the trend reversal when we get here the slow bias turning from red to green, and an entry setup to go long appears in the price movement. And so with this unique trade containing 1, 2, 3, 4, 5 entries, and 1, 2, 3, 4, 5 partial exit and a final exit, closing all the remaining open unit, we had 1, 2, 3, 4, 5 open units which were remained. And so we catch a different profit, a much more important profit, in this case of 295 pips instead of 96 pips with the max primer. And so the reward to risk ratio will be extremely important in this case. A reward to risk ratio of plus 7.76R instead of 2.72. We have multiplied the result by 3 with the scaling techniques. Now with the scaling technique along a trend, we will not necessarily always multiply the result by 3. Sometimes it's just adding a few percentage to the result, for example 30%. It depends in fact of the length of the trend and on the number of scalings we can do. So this was an example of a short trade with these main concepts we use in the max. And I could show you a lot of examples. This is another example with the Euro Kiwi. So several trades, so 4 trades along that movement with a lot of possible supply and demand level. And you can see the type of result we can get and how nicely these levels sometimes are working, so to allow some banking profit. So 1.27. So because we had small trades with the max primer, but the same movement with the max standard, so has produced a very different result of more than 7R. So we have multiplied the result by approximately 5 in this case. I have said that we can trade in any time frame. I can show you multiple examples, but I will skip this one. This is an example of an index. So it is the S&P 500 on the daily time frame. And so we have exactly the same structure of the movement. With the max premier, for example, we have an entry setup, and then in this case we had no partial exit but directly a full exit because we had a trend reversal. And so one entry, one exit for it was a rather quick trade, even if it was in the daily time frame, but an almost 1.5 hour result for the reward to risk ratio. But with the max the standard, we can catch a way larger of the movement, starting at the very beginning of the downtrend. So here, as we can see, we had 1, 2, 3 entries, so the initial entry and then 2 additional scale-ins, several partial exits before the final exit when the trend has reversed, and so producing a nice plus 10.6 hour profit instead of 1.5 hour, let's say. So we have multiplied the result by 7 approximately, so in this case. We can trade, of course, also other instruments. I could have shown you example with commodities, for example, gold, crude oil, silver, and so on, in many time frames. So what the Max courses provide you with is, in fact, a trading method and concept that work. And along the course, we explain why these concepts are working in relationship with what the institutions and the big boys are doing in the market, which justify the method we are teaching in the Max courses. So with the Max courses, we provide also, consequently, a lot of training. For example, with the Max Standard, but Chris will talk more about that. We have several sessions to explain what the Max concept and rules are, but we provide also a lot of support to reinforce your trading skills and your money management through the different practice sessions we have. We have every week, so every Saturday, a practice session. In order to help furthermore our Max members to understand how the Max is working and to trade in agreement with the global context, we provide also a lot of information for free to all our members, but also to any trader who is interested by this kind of information. So if you go on our Newswatch page, on our website, and the address is, and I think Craig or Chris will put the address in the chat area, so www.maxrelingsystem.com/newswatch. We provide every week an update of a lot of information. If you want to be informed of these updates and access the information, you can put on this web page so your name and your address, and you will be updated of the new update. So we list, for example, in the first part of this web page, a certain number of geopolitical events or situations we have to pay attention, and these geopoliticals can evolve and they can change over time. After that, we provide a simplified economical calendar, because not all the news are made equal. There are a lot of news which are really not important, at least in the Forex. There are very few news which really impact the movement in the Forex, and so in this simplified economical calendar, we provide for the entire week, day after day, so what are the news which are really important, with some notations we are using to indicate the level of importance of these news. Then we provide also every week an updated list of the most moving pairs. We call that the top pair list, which contains in general 10 pairs, the 10 best moving pairs in general, which are the pair which are usefully the best trending pair. Because don't forget that the Max is a trend following system. And so in order to be extremely profitable, we need to catch trends. And so these pairs are usually the best trending pair. Now, there are some exceptions. When we have a news release with a big surprise, sometimes some other pairs can become the best moving pairs. But this is a concept I teach in our Max Advanced course, so when we have a more global view of what the market is. After the web address, Chris, will be given in a moment by Chris or by Craig. Okay? And if necessary, at the end of this presentation during the Q&A, so I can show you our website. So below the top pairs list, we also provide for each day of the coming week, Monday, Tuesday until Friday, so smaller list of pairs to monitor and to trade. And generally, these pairs provide the best opportunities to trade based on the understanding of the context and the news release we have for each day of that week. And then below that there is an explanation how to interpret all the information given so in these 3 pages. And all these information are free, so whether you are a Max member or not. Then in order to understand how to trade with the global context, what we do is we provide what we call the Max Bias Advantage. Every day I make my own analysis for the global context in order to know which currencies are strong, which currencies are weak, if the market sentiment is risk on or risk off. And for that I analyze a lot of information. I analyze so what the central bank are doing. I analyze more in details the news release. I analyze the market sentiment by reading some newspapers or a lot of headlines. I also watch what different markets are doing. So I watch what the Forex is doing, I watch what the stock market is doing, what the commodities market is doing, and the bonds market is doing, to see how they react to each other through their intermarket correlation, in fact. And that way we can easily, or in a more easily way, define what each currency are doing, what each indices are doing, what each commodities and bonds are doing, and so we can define a direction for each of the instrument we consider to trade. And for example, in our terminology, green up arrows mean that for that specific pair we have to favor that day long trades. For another one, down red arrows means we have to favor short trades, in fact. And the number of arrows indicate if the bias is a strong bias or a more risky bias. So we have a definition so here on this page. This information is not free. There is a small monthly fee to have that access, and so we have a lot of subscribers using that information. We also produce the bias for a long-term perspective for the traders who prefer to trade higher time frames, so 4 hours or even higher, the daily time frame, for example. And these bias are changed from time to time when the long-term bias has to be changed. So, and when we consider trading higher time frames, so in fact the bias are more in agreement with the fundamentals. While when we are trading intraday, so the directional bias is much more influenced by the market sentiment. The market sentiment being all these factors outside the fundamentals factor which can influence the price action. And so you can see that the Max provide a lot of training in order to provide you with confidence in your skills. The aim of the Max courses is to build several levels of confidence, not only the confidence into the market, but also into the Max and into yourself, in your ability to apply the Max, and for the Max to catch many of the opportunities the market will propose day after day after day. And so for that we provide a lot of mentoring, a lot of homework, a lot of free workshop, or free practice, like Craig has mentioned earlier, and for which Chris will give much more information. And so today what we propose to you is the 2 levels the two first level of the Max courses, the Max Primer, which is just a sample of the Max standard, very, very simplified version. And then we propose also the Max Standard course, which is our flagship training, which contain, in fact, all the concept of the Max with the scaling technique, so which provide these improved result when we compare the Max Standard with the Max Primer. So this ends my presentation. If you have any questions about what I have talked about, so feel free to post your questions, to repeat them if necessary. And now I give the mic to Chris, who has some very important additional information for you. So Chris, the mic is yours.
Cheers, thanks. Hi everybody, thanks for coming along, really appreciate this. As you can see, I'm partner with Craig and Eusebio in this venture. This is our 74th set of courses, and we've been training since 2008. About 2,100 people have gone through the courses so far. So we're pretty experienced at this sort of stuff. What we want you to do, and this is the whole point here, it's not necessary so much to make money, though that's the mechanism. Everybody should have a set of goals that will help pull them towards success in the trading, and it just depends on you which goal you're after. So what we're trying to do is help you get there. Once you've determined what you're actually aiming for, we're here to help you get there. So if you want to carry on doing what you've done with your existing sort of buy and sell systems that are okay, but just limp along essentially, with little interaction, no personal training or support, you're welcome to. But with the Max, we provide supervision, interaction with you. The Max itself provides consistent results, and you can see that over the years that we've been at this, and feedback. So some of the challenges that we have when we're trading is to do mostly with the price. There's also emotional side of things, but if there's poor price action or things are moving in a tight range or sudden movements, they're really hard to handle. And the Max can take care of a lot of that information. One of the more important things is what direction should you be trading in. Like you can have setups which then suddenly turn against you. And Eusebio's companion indicator can help alleviate a lot of the anxiety associated with that side of things. Some existing systems out there have imperfect indicators. They lag or they've got poor direction, so you're not too sure about what you're getting into, and it's only after you've gotten in that you suddenly find out that it's going the wrong way. So we have particular setups to look for. Eusebio's indicators are saying this is the direction you should be going in, and then we use price action to help us get into the trades. So we're trying to help you overcome all these challenges by adapting to the price action. We don't predict, we manage the risk. So if we get into a trade, then we see with all the techniques that we've got when we're getting into a risky position or not. And once we're in a risky position, then we have rules to take care of that particular risk there. And if we're in a good movement, then we can scale in and add to that trade. So we actually can increase the amount of risk on the trade at times, but still not really going over the original risk that we took in the first place. And counterintuitively, the more that you scale into a trade using the Max system, the less risk there becomes. So I know this last sentence is going to be a bit on the nose for some people, but the trades actually become risk-free after a while. It's not every trade, but most of them become risk-free and can have a guaranteed profit. So the benefits from the Max training is you get very precise and detailed setups. If you're trading in a 5-minute chart, typically you'll find a setup, and then within half a pip you'll be entering it. It's none of these, the moving averages that crossed. So in the next 20-30 minutes I might get in if it looks like it's moving. You get the setup and then you get in. There's no discretion there. We use hard stops right from the very beginning of the trade, and we have trading stops to manage the risk as we go, and we do it in a particular manner. We use homework well, we ask you to send in your homework. This speeds up your learning and deepens your learning as well. And the other benefit of it, which is huge, is apart from the practice, somebody else will look at your work. There's been times when I've been told something and I've thought, oh yeah, I know all about that. And then when I've written out or shown somebody the chart, they've said, no, you've got this wrong. It's completely this way. And it's not until somebody else points out what I've done, which I thought was absolutely correct, that I've done wrong, that I then understand and can sort of start sorting things out. So the third person objective point of view is really helpful. Okay, so when you do one of our courses, what you get is everything. There's nothing else to get. We do have a couple of extra indicators or one extra indicator that can help you with your entries and exits, money management, but you don't need that. And if you've already got one, then that's fine as well. But you get all the indicators and templates, examples, screenshots, videos, etc. Once you finish the course. The training is professional, as you've seen with Eusebio going through the charts. You get a lifetime access to all the materials and support. Even 5 years later, people saying, hey, my house burned down and I don't have my computer anymore. I didn't save all the information off to an off-site backup. So can you send me the course again? And it doesn't happen often, maybe once or twice a year, but we've still got all the information there. And even years later, you can still ask for help from us. So what we want to end up with here is that your overall result is from the course itself, you'll have a system that's got a very high win-loss rate. So even over 90% for higher time frames for some of the setups. The standard course, when you take that, will provide profit boosts from 30% to over 300% more profit out of the same movement that a simple buy and sell, like the primer course, provides in profit. So the primer course might say, okay, we've made 60 pips out of this. The standard course could go for, say, another 120 to maybe 300 pips. It just depends on what the price movement was like itself. But the standard course can really boost things. And so that gets you to your goals much, much faster than just doing buy and sell that most other courses teach. We supply you with a whole pile of support as much as you like. I mentioned the repeat discounts. It's a very powerful and a very safe trading method. And like I said, we keep hammering on about being risk aware and minimizing risk as much as possible. People can burn through accounts really, really quickly, and we don't want that to happen. So we want you to go safe and slow and be risk-free. And the real benefit to you from all this is that you are able to achieve your goals safely, less stressfully, and as quickly as you can. So in order to get there, we have two courses that are available today. The Max Standard with all the bells and whistles, and the Max Primer, which is, like I said, just a simple buy and sell. The Standard is 7 sessions, the Primer is 2 sessions. The Standard has got something like 11 different entry scenarios. The Max Primer has got about 2 with a variation. So it's profitable, the Max Primer, but it's slow. It'll eventually get you there, but I think you get a bit sort of frustrated with it after a while. However, it is still profitable, and it's got basic money management, so you're going to be safe with it as well. But on the Max Standard, like there's multiple entry scenarios, so you're not sitting around waiting for price to take off in your favor. We've got the profit acceleration there to boost your profits once you do get in, way more than the Primer. And it's the trade and risk management that's built into the Standard. There is no calculations or anything like that you need to do while you're trading. You simply follow the rules like buy and sell and take. Just follow the criteria. There's no calculations or spreadsheets to do on that side of things. So it's a comfortable way of going through a trade. And with the Max Standard, like I said, when you start scaling in, you become in a risk-free guaranteed profit situation many, many times. And that really reduces the stress from trading, wondering if you're going to make some money out of it. Yeah, it just makes trading a lot more pleasant. The standard starts in about, not next week, but the following week, and it runs for 7 weeks, and it starts on June the 10th. Normal price is just under $3,000. We have a webinar special of $2,399. Okay, and primer, please, Eusebio. So if you have any questions, please yell out. Which broker? Okay, it doesn't matter which broker we use, just so long as everybody uses one. And we don't recommend brokers. We find that they tend to collapse after a while, or they have been in the past. They're much safer these days. Okay, the primer course starts at the same time as the standard. So the primer course is just a subset of the standard. The primer course only runs for 2 sessions. So these are the first 2 sessions of the standard, and then the standard goes on with all the risk management and the profit making capability and the scale-ins and many more entries. So the primer course is just a starter. It's a taste. The normal price is $329. We have a webinar special of $159 for that one. And once you've done the first 2 courses, you can say, okay, I want to do the standard now, and you can pile in on the standard. I'm not too sure if the discount applies if you do something like that. Okay, so here are the 2 side by side, the standard and the primer course. There's been some questions which have come up in the room, so I'll quickly flip through those. But Eusebio, did you want to bring up anything before or after the questions?
No, we can answer the questions, and then if we have some time, and if there is something more to illustrate, so I will do that with pleasure.
Okay, cool. So we asked about the long bar definition, and Nigel's left, but he said, the long bar is defined as twice the previous bar or an average of the previous bars. So I've replied, I've already answered that question verbally, but if you're looking for a long bar, it's roughly 2 times the average of the previous bars, and we take something like the previous 3 bars or the previous 12 bars, or the number in between, just depends on how the movement has been, and we look at those and we take the average of that and then multiply that by 2, and it should give us a long bar, a point at which to say, okay, this bar that's forming right now is now a long bar, and so I can start placing my exits on this. Okay, and in the course, when you get this, you'll be given an exact definition, and we've also got thanks to one of our members, has written an indicator to sort of take out some of the guesswork on this. Still can't get every situation involved in the indicator, but it's really helpful. But there is more information about long bars in the course as well, like what to do if you get 2 long bars in a row or 3 long bars, what to do if price keeps on going in your direction, what happens if price suddenly snaps back. So just knowing about the long bar is really helpful, and is a good place to take some profit. But there is a lot more detail goes on in the course about this. Okay, Rule has asked, can I use this system on a small account? And the answer is absolutely. Most traders that start with a small account. Yep, it will limit the time frame that you can trade in. So if you only have, say, a few $100, you won't be trading the daily time frames because their risk would be too high. But on the smaller accounts, it's quite possible to trade the smaller time frames. Okay, does this work with ninja traders and with futures? Do you want to answer that one, Eusebio?
Yes, indeed, it works with any market, and especially with NinjaTrader, we don't have all the indicators available for NinjaTrader 7 or 8. We have almost all of them for NinjaTrader 7, and some of them for the moment with NinjaTrader 8. But if you have the ability to code yourself, or if you know someone who can code, we can provide you with the code of MetaTrader if you want to code them in NinjaTrader. But yeah, indeed, we have traders who are using NinjaTrader, indeed.
Okay, and if you have another platform that you would prefer to use, we can supply you with the source code from MetaTrader so that you can convert it or port it into your particular trading platform. So we've got no problems about giving you the indicators themselves. In fact, we recommend it. And some of our members have given us back the indicators for that particular platform. Like, that's how we've got the Ninja Trader platform. Okay. Been also asked, well, I'll come back to that one. Would I get the indicators with the primer course? So, Ron, yes, all the indicators that we use, you will get with the primer course. And that includes Eusebio's ETF lines and his companion indicator. So the indicators that we use aren't all that, apart from the companion indicator, which will require porting, the other ones are pretty basic, standard, almost, ones that you can get from pretty much any charting package. So we're not doing anything special with the indicators themselves, but we do use them in particular manner that a lot of other trading platform training courses would not use our indicators. For instance, our stochastic it is just a plain old stochastic RSI indicator, but we use it in a different way than regular people. We don't focus on the overbought, oversold so much. Okay, I'll just leave it at that. But we use it to help get into trades. They're helpful for the verification of them, even if they're in an oversold or overbought condition. And they're really useful for helping determine what the price mode is, like whether it's in a trend mode or a consolidation, if you're in a choppy or what we call a spaghetti mode. Okay. And so Bradford, yes, that includes the advanced trend indicator. If that means companion ones, then that's what it is. I'm not too sure what indicator you're working at. So we have TradeStation. Okay, we can give you the indicators for that. We have them for our old version of TradeStation. I'm not too sure if it's current or not. Thinkorswim, some people have ported them over to Thinkorswim. Sure. One of the things with what some people have done is they've, for instance, Interactive Brokers has its own particular platform, which is really powerful, but its charting platform is not that good. So people have used in the past MetaTrader as for the charting, and when MetaTrader says, okay, this is the setup, then they've placed their orders through their regular broker platform. So you can have them both up at the same time once you get used to it. And what else? What other questions have we got, Eusebio? Okay, thanks, Rolf. Bradford, we use MetaTrader 4. We can give you the indicators to port to MetaTrader 5, but MetaTrader 4 there's not that much of an advantage going to 5. Technically, it's a bit faster and cleaner. Practically, it does less things than MetaTrader 4 can do at times. And going from MetaTrader 4 to MetaTrader 5 would mean we would lose out on a whole slew of other developments and information that's available from MetaTrader 4, which isn't available in 5 yet. Okay, I don't trade Forex. Does it work with equities? Yes, Ron, been through that one. Okay, I think that's pretty much it. No problem, Bradford, that's fine. Anything else that you want to say, Eusebio? Because I can't see any other questions coming through here.
No, I think we have covered all the Let me show you just for today, for example, what was some kinds of trade available combining our advanced indicator, which is the slow bias, with the global context. And so I will just show 4 charts just to not make it too long. And so, and I'm going to explain the chart. Do you see my chart? So here?
Yep, got your charts up.
Okay. So the 2 white vertical lines represent usually my trading session, starting a few minutes before the London Open and usually ending around the London close. And so today I have closed my session 1 hour earlier. And so just after the London close, which happens in this area, I established the bias for a certain number of pairs and other instruments, some indices, some commodities, some bonds, and a green vertical line represents a long bias. So in this case, this means that the global context analysis I have made tells me that we have to favor long trades on this pair, which is the Euro-CAD in this case. A magenta line represents a short bias. So in this case, we have a long bias, and you can see at some point, so the slow bias has turned from red to green, catching this uptrend. And so it was easy so to catch that movement into one trade with possibly one scaling, for example, making a profitable trade. Another example is this one, the euro pound. My bias was long also on the euro pound, and you can see that almost immediately after the bias has been established, we could have opened a trade on this candle and catch the entire trend on the euro pound and making perhaps 1, 2, or 3 schemes. So again, a very, very nice trade. Another example will be this one. The euro yen, my bias was long too, and again a very nice trade caught during the European session. And the last example was a short bias on the DAX, so which is the German stock market index. My bias was short, and indeed we had to be patient for several hours until the DAX turned downward, making a nice downtrend we could have catch very easily. The timing was perfect with the slow bias, which turned from green to red, so easy to take that down movement, and with the possibility to make perhaps one scaling. And so you can see that when we trade an instrument in agreement with the global context, and when we time the trade with our slow bias, then we get a very, very high winning rate, around 90 to 95% winning rate. And when we have a losing trade, it's always a very, very small loss. On average, a losing trade produces a loss of around minus 0.3 to 0.5 R. So a very, very small loss. From time to time, but this is not very frequent, the loss may be a bit larger when we practice scaling. So, because the scaling, especially at the beginning of a new trend, so introduces some additional risk. We have to control that risk, but I have never seen a loss larger than 2 hours. So, because we have a very strict trade risk management. So these are just a few examples how we can combine technical timing with the slow bias and the global context bias to give a very, very high winning rate. And we established these bias for around 30 instruments, around 15 to 20 pairs in the Forex, 5 indices, the S&P 500, the Dow Jones, the Nasdaq, the German DAX, and the UK FTSE 100, 2 commodities, gold and silver, gold and crude oil, and 2 bonds, the 10-year US Treasury bond and the Euro bond, in order to have 2 bond market, and also on the VIX, which is the volatility index of the S&P 500. So this represents, if I can correctly, 26 or 27 instruments we can use with this context. So.
Okay, can you hear me? I'm not too sure if I'm... Okay, cool.
Yeah.
Thanks for that, Eusebio. Ron, I'm sorry, I forgot to answer your question. I did see that there. I said I would do it afterwards. You've asked if we scan the market for new signals, buy and sell based on the indicators. We don't have a scanner as such. With the Forex market, we've only got, say, 28 pairs. We whittle it down, if you look at the news watch list, to 10 pairs to monitor for that particular week. And on each day, we whittle that down even further to 4 pairs to sort of monitor to see if anything's going to come about with those ones. And then if those ones aren't working, then we've got another 2 or 3 that you can also monitor. But so we don't have it like a slew of instruments like a stock market would have to go through to find the best.
However, Chris, let me change my my profile on my MetaTrader platform, because I'm going to show you something. We don't have a tool to scan the market, but we have a tool which almost allows to scan the market in the way I'm going to show you. But just give me a few moments to change the profile of my MetaTrader platform. So I'm almost there, and I'm going to show a portion of my screen. So here on MetaTrader we have a special indicator. It is not a free indicator. It requires a small one-time fee. I think it's around $80, and it allows to define a list of instruments the broker supports, of course. And you remember the ETF lines on my chart. And so this tool, for all the symbols you introduce in the list, will define for the time frame you specify. You can also specify the time frame. For example, I have specified here the 5-minute time frame, the 15-minute, the 1 hour, the 4 hours, and the weekly time frame. This tool defines or display an arrow when the 2 ETF lines cross. So we have a green arrow when the 2 ETF lines cross upward, and a down arrow when they cross downward. And we have also the number of bars since the cross. And when there is a change, a cross in one instrument, we have an alert, and then we can check that instrument to see if there is a coming entry setup or soon an entry setup. These are not trade signals. We do not scan for signals, but we can scan for some of the conditions which are required to have a trade. And so this is a useful tool I use myself to see where we may have some opportunities. And technically, we can see by observing several time frames if the trend is more oriented to the downside or to the upside. For example, if we take, for example, the euro pound, the trend is still essentially to the downside because the price is going downward only on small time frames like the 5-minute and the 15-minute, but upward on the higher time frames. And so this is a very, very useful tool we can indeed use.
Okay, thanks, Eusebio. Forgotten about that one. And we've just got a question from Carlos. Do we have a trade room so that he can watch trading through the European session? Sorry, we don't have a trade room as such. Legal reasons. We can't give away trade signals or anything like that. But this Friday, Eusebio will be doing a workshop that you're welcome to come along for the non-farm payroll. And he will explain as legally circumspect way as possible where it's possible that you could have entered into a trade, and if something good turns up, and if nothing good turns up, then you will force a trade, and then he will show how the max will manage the trade itself. And it's really interesting watching that side of things go on. A lot of people think, oh, let's get into a trade, and it's all I think it's like a trade room with every bells and whistles going off, and it's lots of panic and stuff like that going on. When you watch Eusebio trade, it's very calm, methodical. We get into a trade, we monitor what's going on. We say, okay, if this happens, then we're going to get out. So you get a really good feel for the speed of the trading as well as the process of the trading. Okay. Well, anyway, let's sign off here. Thank you very much for your participation here and following along with us. Stay safe out there, everybody. Bye now.
Yeah, keep safe, but don't fear. And so, see you next time. And in the meantime, take care. Bye, everyone.